Snapshot of Challenger Gold, 2 assets, both in South America. Lead asset, very much our Walilan Gold Project, 2.8 million ounces. We've taken that through from exploration, high-grade core of 1.5 million ounces at about 5 grams gold. We're almost about to execute a toll milling strategy, be pouring first gold in November, and that toll milling strategy funds a larger 150,000 ounce a year operation. In Ecuador, 9 million ounces, a large porphyry project, and where that asset has all of a sudden become interesting is that the company next door to us in Ecuador has just been taken over for $650 million. You take a look through valuation per ounce of what they were taken over for, it values that asset at about $170 million, which incidentally is our current market cap. So you could argue you're getting our main asset, which is in Argentina, for free. Well funded. We raised $35 million about 2 weeks ago. We were approached by 2 major gold funds, L1 and Helicon Asset Management, the 2 largest shareholders in Adriatic, who put $15 million in each. And our chairman went along pro rata as well. He ended up putting $7.5 million into the company. So that funds us fully into production from toll milling with quite a buffer. In terms of the Ecuador asset, so what I'm showing you there is on the top right, you've got Lumina Gold, the Cangrejos project, 26 million ounces, runs about 0.5 gram. We've got 9 million ounces. You go to their core shed, we've been to their core shed, they've been to ours. It's exactly the same stuff. It's one large deposit split by a tenement boundary. 2 weeks ago, CMOC closed, which is China Molycorp, closed the acquisition of Lumina for 650 million Australian, which again puts a valuation of us on of around about 170 million on that asset. Does it make sense for CMOC to take us? Yes, they've got a big streaming deal they inherited on there. We've got no royalty. That 9 million ounces we got gives them critical mass to probably start at 1 million ounces a year, and we've got all the exploration potential. We've got 9 million ounces from drilling out 4.5 of 15 big gold in soil anomalies. We've drilled 6 of the other 10. They're all mineralised. How do you get full price or near it? You can't be a desperate seller. I couldn't say that 2 weeks ago, but with $35 million in the bank, I can. You've got to be prepared to take your time, and it's got to make sense for the other party to buy it. We were in the process of spinning that asset off into Canada. We've put that on hold. Give us 6 months, maybe a little bit longer to get full value, but you'll see a significant surprise out of that. So, we'll just sort of work through slowly and get full value for that, and hopefully there's a very nice windfall for shareholders sometime in the next 6 months. The main asset, so what I'm showing you there are the financial highlights of toll milling. So a really synergistic opportunity. So there's a mill 165 kilometres down the road that didn't quite have enough ore to start. If they didn't restart production in the next 2 years, they're going to lose that mill. They're about 500,000 tonnes of ore short. They approached us and said, look, would you process 3% of your ore body through us? So we process 3% of our ore body. It's the sort of 450,000 tonnes near surface, goes about 6.5 grams gold. It's the ore that's not ideal for the plant that we'll build. It's our oxide cap. And over the 3 years of toll milling, at current spot prices, it actually generates about 150 million US EBITDA, or about 100 million US after tax. And that sort of fully funds us into the larger operation. And that's why, that's what toll milling's been designed for. In terms of who's who, I'm an exploration geologist. Started a company called Citadel Resources, came with a great management team, had an asset in Saudi, sort of 6 years of hard work on. That company was taken over for $1 billion. Mike Zivic is our COO. Up until I pinched him 2 years ago, Mike was running the largest gold mine in Argentina. He was running a 500,000 ounce gold mine for Barrick in the same province as us. Sonia Delago, a director of the company based in San Juan, does the government community permitting. Without Sonia, we wouldn't be fully permitted for production, which we are. And then Bira, we put Bira on as general manager about 3 months ago. He's a mining startup specialist. His job is to get us mine ready for toll milling in Walilan in Argentina. And in the last 3 weeks, we've sort of signed up and have started about 11 of our first sort of 25 staff. It'll be a contractor run operation, so we're fairly lean. But in the next month, we build out the entire management team. And then in terms of shareholders, Eduardo Elstein, one of Argentina's richest men, 13% shareholder and chairman. He is also the owner of the toll mill. His stake in us is worth more than his stake in the mill, so interests are aligned. L1 and Helicon that came in that recent raise, and then BlackRock have been there for about 3 years. They're the world's largest gold fund. And importantly, board and management, myself included, we've got serious skin in the game. We own about 16% of the company, so we lie awake at night thinking, how can we get the share price up? Not, do you think I can convince my chairman to pay me an extra $50,000 a year? Argentina. Argentina, up until 2 years ago, has really been uninvestable. The challenge of Argentina is you sell a gold bar, under the legislation you had 5 days to convert it to pesos, and that does no one any good when you've got 100% inflation and the peso's declining at about 100% a year against the US dollar. You fast forward to where we are now, they've got a new president, a new mining act, they've dropped the tax rate from 35% to 25%, but you no longer have to convert your gold sales into pesos. You can hold them as US dollars, you can export dividends, and then about 6 weeks ago, they floated the peso, so even if you had to convert into pesos, it's now a big liquid market, like converting Aussie to US. You can get USD in and out of the country very easily. You're crossing about a 0.5% spread. The size of the prize. So, what does toll milling fund? So, late 2023, we'll put out a scoping study, high-grade underground focus, fit for purpose. It was a terrible market at the time. You needed to be low capex, quick payback. Look, it was a lovely project. 120,000 ounces a year over 7 years, low cost. NPV of about 400 million US. You look at sort of $2,500 gold, the NPV of that project's about 800 million US. A week before we put out that study, we got back some column test results. That's testing that tells you whether heap leach will work. Our ore body's got about 1.5 million ounces, goes about 5, and then another 1.5 million ounces going about 0.5 gram, lower grade halo. The heap leach results we got back were showing recoveries of an average of 75% from the low grade at a 1/2 inch crust, which is quite friendly. And really that's unlocked the ability to take out almost the entire 2.8 million ounces. So what you're seeing there is the high-grade scoping study, which is now irrelevant. In the brown, you can see 4 small pits in the underground workings, and then what it looks like now. We're working on a sort of larger life of mine study. It'll be a sort of 12, 13-year mine life. You're moving 900 million tonnes, all open pit, putting about 25 million tonnes of ore through a plant, another sort of 60 to 80 million tonnes of ore on a heap leach pad, and you're recovering just under 2 million ounces of gold over around about a 12 or 13-year life. So you do the math, and it's going to be a plus 150,000 ounce a year long life producer, which will be very attractive to just about any mid-tier North American. A little bit about the project. What I've done is I've put the geology over the topography. That line of hills there that you can see up the page, that's the key. That's actually a thrust fault that controls the mineralisation. You can see that line of hills goes to the top of the page another 5 kilometres. It goes another 4 or 5 kilometres to the bottom of the page. Green's high grade, yellow's low grade. Important points are we've got 16 metres at about 16 grams where that Fleur-de-Julian sign is, 600 metres south. The 2 kilometres to the bottom of the page in the hills, there's a series of old workings, and we've got 25 gram material 2 kilometres north. This deposit's wide open. For the last 3 years, we've just had no money to go drilling. We stepped back and put a kilometre deep hole underneath the deposit to test it at depth, and that hole finished in 4 metres at 6. So mineralisation wide open everywhere. It will get bigger. And this is just a sort of typical section. The sort of inset there is the higher grade skarn material. Lovely hit, 60 metres at 10. That does continue at depth, and then you look at the sort of lower grade halo sitting above it there. It's actually interesting that it's starting to turn high grade. The deepest hole we've been able to drill on that line there ended in 28 metres at 5.5 or 5.4 grams gold. So again, the deposit's wide open, both the low grade and the high grade mineralisation. It will get much, much larger. Look, I won't say too much about the met. It's simple, vanilla, off-the-shelf flotation. We then take that gold and silver concentrate, produce gold bars on site, and the heap leach for the low grade I've spoken about, which really unlocks that 1.5 million ounces of low grade. And this is visually what it looks like. So on the right, you've got the grade at various sort of cut-offs. The yellow there, that's the sort of high grade, almost 1.5 million ounces. That was based on that high grade underground study, and it was only accessing 1.5 million ounces of the resource. At sort of gold prices of 2,500, the heap leach is economic, probably down to almost 0.1 of a gram. we'll cut it off at 0.2, which is there in green, and by doing that we access almost 3 million ounces of gold in the larger operation, which is why it's a step change different. Exploration potential, so we own the entire belt. We've got 600 square kilometres. We own the underlying land. It just made things easier. That's the reason we're fully permitted so easily. We know landowner negotiation, don't have to pay for water, don't have to pay compensation. And then the pink blobs there are intrusives. Think to grey mining. These intrusives are the source of the gold. You have these hot fluids containing the gold that comes up above those intrusives. The black dots are where we've drilled, so we've got almost 3 million ounces on 3.5 kilometres of strike around those intrusives, and they're all the same age, they're the same composition, they're the same rocks. We've got another 35 kilometres of strike. And again, we've done no exploration for the last 3 years because we've been locked up with no money. But come November, when we get a cash flow, that all changes. We're going to have to be unlucky if there's not another Wallilan there, given the current resources open everywhere. A little bit about how we do toll milling. So what I'm showing you there is the toll milling mine plan. Those 4 pits there in green, they're our toll milling pits. We start at the left, that Sanchez pit. It's a 1-to-1 strip, goes about 8 grams, really easy pit to get into. Same thing with Norte, that goes about 7.5 grams. My COO, who's here today, he's probably at the booth, has driven me mad with this, but if you look at all of that infrastructure, the way this has been designed is everything is the same spot for the larger operation. The waste out of those first 2 pits builds that blue ramp. That gets us access up to the Magnata pit, which is our 3rd pit, so we can mine that. We've got a reserve pit, Sanderson, where if anything goes wrong, we've got another sort of 120,000 ounces, or if the plant does better than expected, and that plant's nameplate capacity is 400,000. We've done our numbers based on 300,000, so we may well be processing more ore. We then use the waste to build ramps down to get us access to where the tailings facility is, and also up to the top of the ridgeline, the purple ramp on the left, so that we're basically taking off the top of the hill and we can start pioneering and large-scale mining in 2028. We mine that out over 2 years, we process over 3. We've also got excess dozer, grader, water cart capacity, so we build out all of those roads. That big road at the right there, that ring goes around our heap leach pads. We don't need that for 3.5 years, but we want all of the infrastructure ready, prepared, so that in 2 years' time, we're actually building the larger operation. The aim is to go seamlessly from 30,000 ounces a year of toll milling up to sort of 150,000 ounces a year plus when that finishes. This is just the cash flow out of toll milling. Pick your own gold price. Again, we've converted all of the costs on a per tonne process, and probably the most important part there is how the toll treatment works. Firstly, it's batch processing. They run 75,000 tonnes of their material. They then clean the plant out, they run 75,000 tonnes of our material. We're not having a fight at the end of 3 months saying how much gold's ours, how much is yours. So it's typical sort of batch processing. We pay them at cost, which is about $75 a tonne. Then there's a 30% margin on top of that based on recovery. We've assumed they're going to get better than 85% recovery. That's what our network shows. In our numbers, we're assuming a little bit less than that. But you sort of take current gold prices, $33.50, it spits out just over 150 million US EBITDA. By the time we pay tax, it spits out about 100 million US cash. And the cost for the larger operation's about 250 million, which means hopefully $150 million debt and $100 million equity. So that is the strategy to be fully funded into becoming a 150,000 ounce a year producer. Timelines, we're getting close. So first blast in September, which is 6 or 7 weeks away. First mining October, first processing November, first gold pour in December. So hopefully that gets in that quarterly report. And I think when you see that quarterly report with 15 million US cash coming in January, it's probably a key re-rating event. As I've sort of gone round, and for the first time in probably a year, because we've got a story to tell, we've done a little bit of retail marketing in the past 2 weeks. I think there's a general recognition the stock is really cheap, and all of the retail brokers, I think, are planning on buying it the day before we pour first gold. So something's got to give shortly. In terms of the larger operation, we're well down the path of a pre-feasibility study. Aim to have that out first quarter next year. That's where we can talk about numbers and show the value of the larger project. I think that's a key milestone event. Then bankable, first quarter 2027. Financial investment decision. We've had a bunch of debt financiers already wanting to whack term sheets under us to get a foot in the door, so I'm not concerned at all about debt finance. And then, so the overall focus and wrap up.
key right now over the next 3 months is getting focused on toll milling production. We want to be pouring first gold in November. We've got the team on the ground to do that. We've got some experienced mining guys that have run between them 6 or 7 different operations in South America. Western experience with those operations as well. In terms of the studies to show the value of the full project, first quarter next year. And then, what we're sort of working through slowly, and we've got to be careful because we've got another asset there that nominally is worth our current market cap. So we've just got to be not desperate, run a proper process, and hopefully shareholders get a windfall from that asset sometime in the next 6 months as well. And we sell that asset for what we hope to sell it for, and then potentially you can do something for shareholders. Thanks. I'm at the booth for the rest of the day, so feel free to come by and ask any questions. Thank you.